Welcome to TheoTrade. This is Don Kaufman. It's August 13th, 2018. You are watching the Theo Night video. Let's get started. A little bit of a wild ride inside of the S&Ps with just minutes to go to the cash close. Just want to focus on this for a second because people are still talking about, it's a low volatility marketplace. Nevertheless, we actually had a range today of about 24 S&P handles. Why does that matter to me? Because the SPX the entire week, again, the SPX the entire week was looking for a $42 expected move, yet we just covered a vast amount of that territory inside of one trading session. Just to kind of give you an orientation of where we happen to be. Again, the expected move this week with the S&P selling off. Listen, S&P selling off 14. It's kind of a big nothing burger right now, but we are closing just off the lows of the session. With that, and before I get into some really specific trade ideas with that, I want to talk about volatility of the overall marketplace because there's a few things that are definitive standouts. First and foremost, so we just passed through a trading session, right? The entire week was expecting right around a $42 expected move. Well, in this particular trading session, we have now seen volatility, and I'm going to kind of highlight it here momentarily. We've seen volatility not just be sustained, but volatility is actually effectively increased. Okay, increased up to a 15.4%. Now, for those of you that don't necessarily tune in each and every video, this is fairly important because the S&Ps have slipped. Again, what I would consider, it's a big nothing burger, right? It's mild, it's a 0.5%. The Nasdaq is almost unimpeded. The Russell took it on the chin a little bit earlier in the day, but actually backed out of it. But the point that I want to make again with this is if you actually look back to this weekend, right, and you start looking back at some of the data that we were looking at specifically this weekend, you will look at the 5-day expiration, and we're only at about a 13 vol. Okay, so we passed through a trading session, again, on a percentage basis. That volatility has come up quite substantially. There's some other signs of risk kind of emerging. Okay, if we look down towards the bottom of the screen. Now, I know that a lot of people want to focus on the VIX, and they're going to talk, the VIX is up 12%. What is the VIX, though? Nothing more than a function, okay, of SPX volatility. We're going to go a little deeper than that, and you're actually going to see that trading firms right now are buying volatility. Okay, when I say trading firms are buying volatility, we're looking specifically right now at the VVIX, the volatility of the volatility index. All of a sudden, the last couple of trading sessions, well, they see something. Okay, there's the closing bell. The volatility index most definitively sees something. Anytime that VVIX gets above 100, I really start to pay attention. Now, as the VVIX starts to rally up, as I said, I'm kind of paying attention at this time. Now, when you start to hit that 110 region, 110 specifically, that's duck and cover. That's get under your desk and start rocking back and forth because things are going to get wild. But the reality of this is it's unusual. It's very, very unusual. What does the marketplace see right now that is driving traders, okay, to buy volatility in the VIX? Because that's what the VVIX is. It's the volatility of the volatility index. What's driving them to come in here to the VIX and to start to load up on options? And again, the VIX, it traded today. I mean, this thing did just shy of 600,000 contracts, so things are kind of rocking out there. Now, in addition to the volatility kind of rising, we've got financials that got themselves in a little bit of trouble today. Now, for those of you that do follow some of the positions that we happen to discuss here in the nightly videos, discussed live within the chat room here at TheoTrade, you will know that we are in a number of XLF financial positions, and specifically we've got a position right here at the 29.27. This is an in-out spread, and that in-out spread is maturing very, very nicely at this point in time. Again, the trade's up about 40% from the initial onset of the position. But moreover, let's not just consider, all right, our own position. Let's consider that if the financials continue the current trajectory, the market's in much more serious shape than maybe we anticipated. In fact, again, the buying of volatility, financials are coming down, right? What do we really need to have happen? the monsters of tech are actually holding strong. You'll actually see the monsters of tech, which includes, of course, Microsoft and Apple and Facebook and Google and Amazon. I mean, Amazon, that thing's still up 0.5% today. We'll talk about that here momentarily. One other thing that really has caught my attention in just the last couple of trading sessions. So, as I said, if the financials continue to fall, okay, the S&Ps are going with it. And that's unequivocal. I mean, the financials were off by 1% today, and it dragged the S&Ps down, even with the monsters of tech starting to rally. Now, let's go to a completely different perspective. When I say a completely different perspective, one thing I've been looking at a tremendous amount in, again, just the last couple of trading sessions, all right, it's not so much about the US dollar. And that's what I've pulled up right here. This is just the dollar index. It's about currency in general. Now, people, listen, I'm not making an argument that you should trade currency, okay? Because I don't do a lot of currency trading. I think it's a heavily manipulated business. At any point in time, politicians steps out of the woodwork. Surprise! They raise rates and the currency goes flying higher or lower. Okay, the yuan in China, they'll peg that thing and it'll rip your trades apart. But the one reality right now of the currency market, let's not even talk about Turkey. You can start looking at a lot of emerging market currencies. You can look at the US dollar. You can look at the euro. Okay. You can look into areas in Latin America. People, there's volatility emerging in the currencies, right? Take a look at like the Mexican peso. Now, people, that's not the most wild move that I've seen on the screen. Undoubtedly, it is a wild move. Obviously, we've had other wild moves. Okay. But mark my words, this continues and we're going to have some problems in these equity markets, okay? Volatility in emerging market currencies, specifically Latin America, has been linked to almost every major financial move, okay, in recent history. Check that out. In fact, some of the biggest moves, starting back, I mean, one of the fun ones you can look at, of course, is in the late 90s. The late 90s, a lot of the debacle that was long-term capital management. One of the big sayings at that time was, we got ourselves a peso problem. Well, let's see if there's continuation of sell-side activity, specifically in the peso, okay, in other Latin American countries. Because right now, though, the currencies, they are all over the place. In fact, if you do want to talk a little bit about Turkey, well, that wasn't the focal point. In the overnight session, people were starting to look at South African currency. Why? Because they've already absolutely annihilated, okay, the lira. So now they're actually moving on to circumstances that are quote unquote similar. This is how traders think. If they think they missed the lira trade, don't worry. They're actually going to hit another currency. So the fun just begins. So the currencies absolutely have my attention right now as the dollar. I mean, the dollar in this session, this thing has been Mr. Toad's wild ride. It rallied, it sold off, it laughed, it cried. It absolutely pummeled, though, some of the commodity products, of course, including gold, which just dropped, again, another 1.5%. Oil got clobbered and recovered during this trading session. Got to understand, these currency moves are wreaking absolute havoc on commodity products. Okay, that then spills over into the equity markets, and that's not what we're currently seeing. Right now, things have been fairly chill, except the VVIX. Well, it looks like traders are buying up volatility, seeing the exact same things I am. Those currencies are tending to scare a lot of the professionals in this business. Last, but definitely not least, we had some spectacular intraday trades that we were capable of placing today, both in the spiders. We bought puts early in trade in the spiders, and probably the biggest one we've done in quite some time when Amazon was up some $35 today. Okay, right in this neighborhood here, we actually purchased puts. And one thought I want to leave you with is, okay, the Amazon trade that we did today, all right, we caught close to the top of the market. But people, that was not the intention of the trade. So let me explain a bit about this and leave you on this note. Okay, Amazon rips out of the gate today. Right? It's a Monday morning. I'm watching it, and at one point this morning, the stock was up in excess of $35. Well, the irony of, again, and the stock is up $35 today. The irony of that is the expected move for the entire week at the time was $36. So effectively, we had pretty much come right to the edge of the expected move for the entire week, which at that point in time, I determined that I should buy slightly in the money puts. Okay, so I buy slightly in the money puts. I'm not holding this trade overnight. I'm just doing an intraday trade, looking, okay, for the expected move not only to hold, but revert effectively back down. And that is precisely what we saw on this front. Okay, now we had one contract on to make a very simple point on this. One contract yielded $1,600. The actual trade itself, if we kind of scroll back in the order history, and this is something that, can spend some time doing this, but if we scroll back in the order history, you can actually see, and I will highlight for you, for your knowledge here, we actually purchased these puts for $22.05. And as the day progressed, obviously we were scalping in and out of a number of other positions. But here's the purchase of the puts. Here is effectively the sale of the puts. Listen, this was not a trade that we sat and monitored throughout the course of the day. We opened it just about an hour after the open. We closed the trade just about, 15 minutes to go to the close. And all right, it yielded a great profitability. Not based on, this wasn't based on Don trying to catch the top of the market. All I was trying to do was catch the edge of the expected move and give myself, a decent risk reward and a decent probability embarking upon that trade. Stuff like that we're doing each and every day live in the TheoTrade chat room. Thanks everybody for joining us on this evening video. Have a wonderful evening. Bye-bye.